Welcome back. If you're in the market for a home, it seems new rules designed to cool off the housing market could make it a lot harder for many people to get the mortgage that they want. We're so happy here to have mortgage broker James Loewen to explain how you could be affected. Welcome to the show.
Thank you.
So much to cover today. I think, and we're going to talk in very simple terms for everybody because there's a lot to get through. First off, mortgage broker, we hear that term. What does that mean if someone comes in to see you? We'll have all your details up on the screen.
Sure.
A mortgage broker, what does that mean?
A mortgage broker, we like to akin it to being able to sit in front of someone that can provide all education and all options to you. The kind of old way, if you will, of going to your lender or your own bank, I assimilate that to going into a beer store that only has one beer,
right? Which
I surely wouldn't visit that beer store. So I like to go to a beer store that's got numerous options, that will find my needs, that will recommend things with an impartial kind of service or view. And that's what we provide, is to show the pros and more the cons of each lender without any prejudice that way. So trying to align the right person with the right lender, there's 35 of them in Canada. So for you to go to each lender and bank, it would take a lot of time. Right. And sure as heck, I don't think your bank is going to tell you why not to work with them. I would have got fired many years ago had I done that.
It's an interesting time and big changes, and I think we all realize what's going on. And my little aha moment was many years ago when I bought a house on the West Mountain, just a nice little back split. It was $157,000. We ended up selling it for $200,000. Yeah. And now that same house is worth close to $400,000. Sure. What has changed? What has happened over the last week when it comes to a mortgage?
The largest change is how we qualify now. There's been several changes. Your actual interest rate, and that's, I think, is the key thing to recognize, is that actual interest rates have as yet not really generally moved. Just simply the qualification rate that you can use. So for many lenders, we've been using the benchmark called the contract rate. So that would be if you're obtaining a 5-year fixed mortgage. Average is around now 2.49, 2.39. You would have qualified at that interest rate, call it 2.49. We now have to qualify that at 4.64. So the Bank of Canada's posted rate. You can imagine if you're qualifying now at almost double the interest rate, we're seeing for the most part it's reducing people's pre-approvals by about 20 to 25%. So the average house price that we're seeing in purchase around $520 or so.
Yeah, give me some hard numbers. So the average price is $520.
So we're seeing average household earning combined income around 80 or so thousand, buying a house around $520 or so. This is again between Hamilton to Burlington and those kind of surrounding areas. I mean, it's crazy to think.
Crazy number. That's crazy.
That $520 is more so coming down to about $420.
Okay, so it's a huge deal.
It's a big difference, yeah.
Because of what they're basing the interest rate on.
Yeah.
Why did they do it?
We've seen 6 changes since 2008 of continual tightening on their end. We removed, 40-year amortizations became 35, became 30, became 25. Didn't really affect the market. We've seen the amount of down payment over $500,000 was increased from 5% to 10%. So anything above that didn't decrease the market. So they've continually made all these changes, trying to restrict the entry into the marketplace, but we've just continued. You just alluded to the fact that house prices have been going nonstop, straight up. So they decided finally just to make a really large impact and try to restrict the amount. If we can reduce the amount of people that can get in and buy, less demand. We're seeing offers are 5, 10 registered offers. They want to try to cool that down, try to stop it from going up at such an expedient rate, because what we're seeing is the affordability or the amount of consumer debt that we have as far as disposable income is actually exceeding our income. We literally are having, on average, Canadians have more monthly obligations going out than they do income coming in. Yeah. And of course, that's a perfect storm for potential collapse.
It's amazing with the prices. You don't need to be a broker just to realize it. And, we see open houses. Curiosity gets us all. You go online, it's only a click away. Sure. And even just the other day, there's one in my neighborhood on Macaulay Street, $439,000. I can't even comprehend that. I can't comprehend that for someone who already owns a home, but for a new first-time home buyer, it's so daunting.
It's been so hard to penetrate and get into the marketplace, and I'm very thankful that my wife and I bought many years ago when we did, because that's allowed us to transfer that equity and get into our next home. I feel very much for first-time home buyers, that's really the people that will be affected. You're having to already come up with some higher down payments. The guidelines are tighter, so it's the penetration or entry is just very difficult. So we're trying to come up with some creative means to be able to assist some people. So this rule, and specifically, is those with less than 20% down. So $400,000 house, $80,000 down. That's very difficult.
Say that number again for everyone.
So 20% down. If
Right.
you have 20% or more down payment,
Yeah.
you're excluded from these rules. Okay, less than 20%, you're what's considered high ratio, or you'll pay insurance on that. Generally, CMHC or Genworth or Canada Guarantee. There's 3 providers. So if you're less than 20, you're subject to these rules, which for the average first-time home buyer, you know, if you finish your school, you're in some of your first careers, you're not making really big bucks, and the cost of living has far exceeded, you know, our increase in our employment. If that's the case, it means it's even harder to save.
Yeah.
So we're trying to come up with means basically to help supplement some clients that are well qualified. If you've got 10% down, we'll help you get to that 20%. Basically, find a way to kind of skirt around this, because as you probably expected, we as brokers, we don't really generally agree with this.
Right,
100%.
I bet.
We were not consulted on it, of course, either.
Yeah. Tell us about this stress test
Yes.
that's out there, too. What I'm sure we touched on it a little bit, but what is the stress
So
test?
that is the stress test.
That's it.
The less than 20% down, they essentially want to know, and they're qualifying to say that if in 5 years, you know, your rate has gone from 249 up to the 464, then we want to make sure that you can afford that. Having said that, as an economist, I've not seen any supporting evidence as to where they've come up with this expectation that rates would be there. Really, they've just taken a rate and chosen the Bank of Canada to say we could use this and really start restricting people. But that is that stress test.
What advice would you have to young people who really want to buy a home? I mean, that's the million-dollar question.
Sure.
What advice is the best? But you, I'm sure, have to offer advice all the time.
Yes, I mean, that's part of it. Our role as educators and just simply giving advice and finding solutions. So, you know, there are solutions. Having a co-signer, you know, having your parents or your aunt or uncle or brother. We've been doing this for years, and it's going to become something that's more and more involved in the process just to get you into that house. Once you're in a home, a year or two goes by, your incomes are up, or you're full-time or get a bonus or raise, we can now assume the house into your name. So your parents don't have to be on there forever, right? But at least you're getting into that market. And it goes without saying, you can save a lot more, you can earn a lot more. If those two things were available, I think everyone would have chosen it already.
Yeah.
And like I say, the last one is working with a broker that will find creative solutions for you to get into the home you want. I mean, right now, it's already very difficult to find a house at $400,000. If you can only qualify for 320, you're in a really, really rough position.
I know there's thousands of people shaking their heads right now, thinking that in our city here, that it's tough to find it under. One thing that we hear a lot about, and I'm sure you deal with it all the time, is everybody from Toronto is coming into Hamilton. Okay, I get it, and there probably are. Is that happening to the degree that we hear it's happening, and from what you've seen?
We don't have the exact figures on that one. We do see, and just a report this morning, that there is some overspill. The major epicenters that they said that they were trying to control, of course, was the BC market, which has been on fire, and the Toronto market. I mean, these are major metropolises in Canada. So we have been seeing some spill out. Generally, for the most part, it's accepted that affordability of homes as we move more westward and outward is just that, it's more affordable. So I think we might start seeing some pressures more this way. Hamilton has enjoyed incredible appreciation, and I think it will continue to. I love Hamilton. I mean, I started my career here. So for me, I think it's a great place. I own homes in Hamilton as well, and more people will continue to demand here in that sect. So making it a little bit harder as well still for first-time home buyers if everyone was going to be moving out from the epicenter of Toronto.
I want your opinion on the other end of the spectrum, and I see it a lot down in my neighborhood in the North End with maybe some older people who are ready to move into an apartment or, you know, whatever, something smaller. Is it a good time to cash out? Have we seen that? That's another million-dollar question, but I'm thinking, you know, is this the time to cash out if you're ready for that next step in life? Because if you're going to buy another house, you'd have to pay just as much money. Is it a good time to cash out into an apartment or your next stage in life?
I think the answer is unique for each person, and that's the best side, is to sit down with a professional and review between your financial planner and a good mortgage broker and your realtor as to what you can reasonably expect. And it's also a good time to take a look at what the rental apartments, how much the availability has gone down quite a bit as well. So it's got to be part of your exit strategy. You pointed out, if you're selling high, you're also going to be buying high. If you're moving to a rental, again, it has to come down to personal needs, I think. But we've seen a large influx of people trying to purchase over the last week. You can imagine it was a mad dash in most offices.
Yeah.
And I think it's, unfortunately, I don't have that crystal ball, but it'll be interesting to see what the next 3 to 6 months brings. as far as participation and what that will do to the marketplace. We're forecasting and hoping that it will simply just slow the growth. All right, so not an actual depreciation of home prices, but just instead of a 20% appreciation, maybe some 5 to 10%, which
Gotcha.
I think is a bit more sustainable, and that's the goal. And knock on wood, we won't see depreciation.
Any general mortgage advice, like, what are maybe the top 3 or what you give to people?
Yeah, I mean, I might be slightly skewed, but I always say you should meet with a broker, right? Someone that can give you external advice on and the pros and cons of each lender. The second one is to make sure that you've got and meeting and reviewing your credit bureau with that person to know what's on there and doing it early in your stage. I see a lot of people that say, we want to buy next week, and then they start much earlier. Give us the opportunity to work with you to go through your credit bureau and fix anything that might not be on there. And take a look at your budget. We do a very simple budget, but it's very effective. Test yourself. If you're looking at calculators, and we'll do a few together, saying it's going to cost you now $2,000, $3,000 a month to own a home, as you know, surprises happen.
Yes.
Let's test it. If you're only renting for $1,000 a month right now, well, test yourself for the next few months. See if you can do that, if you can afford those. We never want to see anyone house poor. It's nice to have a beer and a steak every once in a while. Yeah. So, we want to make sure that clients can afford that, and really doing that kind of tests in those situations can help people prepare for it.
Is a down payment, this might sound obvious, but is that down payment really a big deal? That's really something to work for, I would think.
Yeah, right? Absolutely. And we want to work with a lot of clients to make sure realization that we can use RSPs, right? That is available as part of your down payment. That the down payment is going to be definitely something required. Minimum is still 5%. So you can still buy a home with as little as 5%. We can even use down payment of gifted sources. So if you've got a very generous mother or father, make sure they give some to me too.
Yeah.
And you can use that towards it. You can also borrow for down payment. So if you've got a line of credit or such as well, and you can actually use that to supplement. And then we're also supplementing some of our clients that are, maybe you've got 10, 15% down, you're close to 20%. We can actually help you to get there, and then you're qualifying under the old rules.
Right.
Now you're able to maybe buy the house that you would have wanted to buy in the first place.
Do you still think that some people want that big house? I mean, the way we were raised, I'm happy in my bungalow and I'm good to go. Do you think that grand house is still something that people feel that they need?
Yeah, we call it the champagne taste and the beerman's income, and sometimes it's it's reviewing, and that's part of that process, to look at your budget, establish realistic guidelines, make sure we're not pushing you to the max anyways. We want to make sure you can still save for your future, plan for families, and all those things get pulled into there. We spend a lot of our time, though, of course, just setting reasonable expectations and looking at the budget.
Yeah. Well, listen, we've gone through it all, James. Thank you so much, and best of luck.
Thank you.
Is this bubble ever going to burst?
We've been asking and saying that for years now, right? So, that's the only thing we can do is the future is dictated by the past, and we haven't seen it there. And I think this is a move towards avoiding that bubble.
All right.
Yeah.
Stay in touch.
Thank you, sir.
That's great. James Loewen, and we do thank him. And again, we encourage you to share your thoughts and feedback with us on Twitter at City Matters TV or email citymatters@cable14.com.